Nandik, I have to talk to you about the the big topic this weekend, and we've been seeing how markets have reacted. I think when that first set of tweets came out, big thing coming India, sort of from Hindenburg, everyone was wondering, oh no, what's going to happen now? What happens to our investments? What happens to markets? Fair to say that markets have ignored something which showed no credibility.
So markets haven't ignored it 100%. The next time this happens, market will ignore it 100%. So the last time this happened, if you remember, the reaction was much more steeper on the way down. This time the reaction has been a bit more mild. So so markets haven't completely discounted it. Markets have reacted to it. But the more this happens and the more consistently they keeps happening on a regular basis, then at a point of time market will not even talk about it. So for example, the media channels are now discussing about it first thing in the morning. 2 or 3 more sessions like this, and people will not talk about this only. You may remember after the exit polls and after the elections, there was talk about how exit polls were rigged and short sellers made money. But even from those levels, Nifty is higher now. So the more these kind of things happen, I think it's good for markets, because our market participation is fairly deep, and this tends to show that everything is in order. So the more these kind of things come, it's actually good for the long-term stability.
No, but in that, having said that, let's look specifically at what the allegations are, what the responses have been. Because for us to just shrug off and say, okay, markets are deep, that's fine. But this time round, especially, Hindenburg seemed like they were grasping at something or the other.
I think we should have an interview in which we should interview you, because you have put the points perfectly. So I would not want to say it in black and white so much, but it's evident as to what's happening, and that is the reason possibly why even equity markets haven't reacted so badly. And the research which they have done seems to be fairly on the poorer side. The kind of arguments which they have given, the kind of data points which they have pointed out. So again, it's a good thing that these things are coming, because this just shows how fair and how resilient the markets are.
Yeah. So what happens next, Nandik? What's your sense? Let's assume there is an event like this which has brought the market down a little. Maybe it brings the market down low along with what's happening to global markets. Who knows, right? But let's assume for whatever reason the markets were to correct a little bit, 1-2% or what have you. Because we are closer to that event, and because you're saying that this is worse per se a non-event, are you a buyer? I mean, were you sitting on a bit of cash around elections? Have you deployed all of that already, or are you in the process of deploying it? Are you a buyer currently? What are you doing?
See, if you look at the data on the 3rd or 4th of June, when there was a sharp crash, and then there was a bounce after that, I was surprised that most of the buying was done by the retail / that segment. So it seems there are people with a good amount of cash ready with them, and it looks as if status quo, if nothing happens on the global front, then at least major dip would be bought into.